Good day, everyone, and welcome to today's session on ERP solution for business automation. Today, we are going to be looking at Sage 200 evolution. And what are we going to be talking about? We are going to be talking about how we can use the fixed asset module to capture our processes around the fixed asset. So, my name is 𝐔𝐬𝐬𝐬𝐿, and I work with Pinmetrics Limited. I've been deploying ERP solutions or automating business processes for companies with over 15 years of experience in the game. So I can tell you, regardless of the solution you want, regardless of your budget, we definitely will provide you something. So today, like we all know fixed asset to be, we all understand the word fixed asset. We know that the word fixed asset is used in accounting term. And what does this do? It is a long-term or tangible, a long-term and a tangible asset which is held for business purpose instead of being selling it or converting it into cash. That is, it is that essential part of it, forms that part of company's operations. You understand? So it's that thing that you use regularly for your business operations. For instance, your laptop, your machine, your equipment, so many other things. So there are different types of fixed asset, but that's not the purpose. And what do we do here? We are trying to bring in the process into Sage 200 evolution. So, and we are going to be talking about the different things that we need to set up for. What are the kind of prerequisites that needs to be set up for? Number one prerequisite is you need to understand the manual concept around the fixed asset. So I would advise you to get a training first on that. Learn, understand the aspect of fixed asset, the concept around it, what are the procedures, or how are the transactions being managed. You understand? So that you can understand some of these things I'm also going to be talking about. Because when you get the manual process right, then you can automate that process with the use of an ERP system. So now we are going to go into the fixed assets module. So like Sage, I told you one of my trainings or one of my videos that fixed assets on Sage 200 evolution is an add-on or a standalone module. So when I say it's a standalone, it means it can work without other modules. Yes, it can work on its own. So you might want to procure the fixed asset module just to track your asset alone, and at the same time it is integrated to other modules. So I'll be showing you how its integrations is being done, that is integrating it into what was it called, the general ledger. So we might be talking about that as well. So now let's go into it. So what are the prerequisites that is actually needed? Number one thing that is needed first is you must have an accounting period. Like I told you, I said it's stand on its own, so you can use it without the main or the core modules. So you can have, you must have to create your accounting period. Now the accounting period, any date within the fixed asset that is needed has to be existing in your accounting period. Yes, it must be existing in the accounting period, and the accounting period that is inside the fixed asset is actually different from that in your core modules. So even if you are using the two, if you are using the core modules and you are using the fixed asset, after you must have defined your financial year, your accounting periods on the core modules, you need to also do that on your accounting period and on your accounting periods for your fixed asset. But it doesn't mean that they have to be the same. It doesn't mean they have to be the same, but it means that whatever thing that you are doing on your fixed asset, whatever date that you are using, whatever the transaction date, anywhere you are going to select it, just know that that date must exist within your accounting period that you have specified. So, for instance, let me give an example. For instance, you have an accounting period that states 2012, but you had a fixed asset that you are trying to bring in, that the fixed asset was as at 2002. You understand? You can see 2002 doesn't fall within it. But if the reverse was the case, maybe you had 2002 as an accounting period and you have an asset that is 2012, then that might make sense. But it still does not make sense. So whether you are using 2002 or 2012, those 2 years must exist within your accounting period. So if you are bringing in hold asset, for instance, if we are implementing your asset for you, after you will request for your asset schedule. We'll look at the asset schedule, and from the asset schedule, we will check the earliest date. So when we check the earliest, let's say the earliest date was 1990. So which means we are going to create, we won't check for any other, we are not concerned with any other date. Our major concern is the earliest date in your fixed asset register. So 1990, so we'll create accounting period for 1990, 1991, 1992, 3 till the date, till the present date, and maybe had an extra year on it. Yeah, that's how we do it. And then from there you can start creating your asset. So it is important. So let me show you. I have an existing asset here. If I don't know if I have an existing asset here. Okay, so that we don't let me log out of this and try to log in through an existing asset. Okay, so hold on please. Okay, so let me use this. Think I should have. If you check some of my videos, I've been able to talk about how to log in into your Sage Evolution. So you can check my YouTube channel, my Facebook page. You are going to see everything I talked about. There are so many videos I have made on Sage 200 Evolution. So, and I talked about all these. I talked about all these transaction session dates where I explain everything that you need to know around here. So if you can get that video, it will be helpful to you. So moving on, let's see, the system is trying to come up. So if you have something like this, you can right click on this and click on Magnite, but I think it's still loading. That's why here. So so it's coming on. Let's wait. So I'm trying to check where we have an asset to register, so I don't. Okay, so now so you can see, look at this. In this case scenario, the earliest date we have is 2005. So you look at all this 2005. Look at this. So So accounting period for each period within that financial year. We got 2005, all this 2005, moved on to 2006, 2007, 8, 9, 10. So we created accounting period for all of them. How do you create your accounting period? Just click on add and specify the last date. So you specify the first date here. When will the assets start for that particular year? So you just specify. For instance, if this is 2000, if I'm trying to open this for 2005, and I just do year starts in January 2005. Sorry. So okay, so all I just need to do is to say when does the year start, and it starts here 2005. So generate period end date based on when do you want this system to start generating the dates, that is generating your depreciation. So I can specify the last day of the month. I can specify a last day of something, maybe Monday, Tuesday, the last day. Within then I can specify what is it called? I can specify the day itself. I can the date, maybe first, second, third, like that. So what I usually do is we specify the day, then we enter 25 here. So I like my fixed assets to be uniform, so I can be able to trace wherever issue that is coming from. So I do that, then all I just needed to do is to click on OK. The start date is calculated. I click on OK. So if you check it now, so when this is when it's starting from, you can see it has been able to drop from January to December. So that is how to create your accounting period within the fixed assets. So now let's move on to the next one. The next one is asset types. What do we call asset types? This is the way your assets are classified or grouped into, maybe because of similarities around them. For instance, we have furnitures and fittings, we have office equipment, we have computers and equipment as well. You have plant and machineries, you have land and building and all that. So based on accounting principles, you might want to adopt that kind of what's it called asset groups. You might want to adopt that. So in adopting that, you must also know the assets that falls under them. The first, that's the assets group, the asset that falls under the asset groups. For instance, you have a group called furnitures and fittings. So furnitures and fittings definitely will be things like office chairs, office tables, maybe curtains and all that. So you might want to also take note of that. So before we go into the aspect of the asset type, let's talk about the depreciation. So now the depreciation method rather. So the depreciation, okay, let me first talk about depreciation. What is depreciation itself? It is the wear and tear of this asset that we've been talking about. So every year or every month, you need to account for how the assets was being used here. So the value of an asset today, let's say the value of your laptop as of today, since you have started using it, will not be the value tomorrow, will not be the same value in a month's time. You understand? And you don't just assume in most of your assets. You don't just assume. You need to have a method, a consistency. You need to adopt that consistency in your depreciation. And in this purpose, and for this purpose, what you need to do is to allocate the cost over what we call a useful life. That's why I'm saying that it is important for you to understand the manual concept first. before going into the system. So the useful life, we all understand the useful life. That's the estimate life we expect the system or the asset to be used for. Yeah, that's the estimate life. So let's say I'm using a laptop. An average laptop should be able to use like, let's say, 4 years or 5 years. So the useful life is 4 years. You understand? So like a car as well, you need to understand if you have an office, what's it called, office car, official car, and you decide to depreciate it, keep it as an asset and depreciate it, you need to have a useful life. Accounting principle has guides to all those kind of things. So you need to also understand that in that aspect. So there are different methods of depreciation, different methods of depreciating your asset. That is, how do you reduce the value of this your asset as you use it monthly, because you need to account for it periodically. So let's say you have an accounting period that every month you need to specify, oh, this certain amount goes into this particular ledger account for my assets every month. So in that scenario, it is important for you to state what method you will be using so that there will be consistency all through. And so let's go into the aspect of depreciation method. So I'll click on depreciation method. Now, you need to specify the different methods you are going to be using. Look at, in my case, I have something called land no depreciation. I have plant and machineries. I have straight line method of 10 years. Now, okay, I will explain now. You have straight line of 3 years, straight line of 40 years, straight line of 5 years, like that. So you need to also have yours. You can give it any description, but this is what I'm trying to. Let me just edit one of them. Let me edit one of them. So now look at this. You give a description to your assets method, to your depreciation method. So you give then the basis of depreciating. You need to specify. Are you using the straight line method? Are you using the reducing balance, equal balance? Now the straight line. What does straight line mean? This is where you specify the useful life of the asset, then depreciate the asset by an equal amount over time. Yeah, so straight line and equal method and equal allowance are the same thing. That is, this and this are the same thing. So you need to actually specify how long you are going to be using the asset for, the useful life of the asset, and what's it called, depreciate the asset by an equal amount over a time, over the period of time. And the only difference between the straight line is that one uses a percentage, while the other one uses what's it called, years. So one uses a percentage, one uses year. So you can specify that within. So whatever you use, you can specify that within. Then reducing balance is another method where you specify the annual percentage in a month. Let me do this. Let me try to add one. Okay, so let me see. Okay, so if I say equal allowance, you can say equal allowance will allow you for years only, to allow you to enter the years only. But if I use straight line can allow you for the numbers of years, and if you want to specify in percentage, you can do that. Then for reducing balance it's a year, it's in percentage, and what this does is that you are going to specify the annual percentage depreciation. The annual percentage distribution, the system depreciates the remaining by that percentage. So let me explain like this. Let's assume you have $1,000, or let me assume the purchase price of your assets, the cost price of your asset is $1,000. So, and you want to depreciate it for, let's say, 5 years. just an assumption, and you are specifying that not here now. You are specifying that each year you are supposed to make the asset depreciate for like 10%. So what the system will do, or how that is being calculated, is that if you specify 10%, which means the 10% of 1,000 will be what? 10 um, $10. So that $10, what would happen is that at the end of the next year, so $10 will be depreciated for this. So the next one, the next year that is coming, will not be $10 again. Because why? The $1,000 is no longer $1,000 again. So the next year it has to be 1,000 minus $10 because you have utilized that. So that is like $90. So it will be the same 10% but on $90 this time around. You understand? So the system starts reducing the balance every year. So that's the essence of the reducing balance. Then there is also plant and machinery. Okay, before plant and machinery, the units of usage. So there are some assets when they are purchased, especially all these big equipment, usually come with a working hour, that is the maximum working hours, or what the expected output of the machine. And you want to be able to specify, oh, the machine could be that based on recommendation, this machine can work, let's say, 5,000 hours in a month. You understand? So it has given you an idea that, oh, 5,000 hours in a month, which means every month you are going to be using the 5,000 hours. Or it can tell you what this asset can do. Let me say its useful life will be 50,000 for throughout its useful life. That is the best it can do. So for every month, you already know how many hours. You've already been able to know, because definitely you know how long your machine should be able to stay. You can use a month to actually see, oh, in this month it used, let's say, 1,000 hours. You understand? So you know that in the next month it's going to use another 1,000 hours till that is utilized. So that's the essence of the unit of usage. Some could be in terms of output. This machine can produce 10,000 tons of this particular product, you understand, in its useful life. So you should be able to calculate or compute that for yourself. Then plant and machinery. This aspect, you specify the useful life of the asset in years. You then set the individual for each year, making the sum total of 100%. So what I'm saying is that you already know that, okay, this machine is supposed to use 5 years, or this equipment or this asset should use 5 years. But 5 years, the first year, yeah, maybe it's going to be very low. The percentage will be very low. You understand? The second year it will be higher than the previous one, like that. So it's more like a reducing balance, but it's every year, every new year that comes, the depreciation increases like that until it becomes 100%. So this that then for immediate write-off, it means that immediately you want to write off the assets. So instead of you leaving the asset for a useful life, this does not have a useful life. All you want to do is to write off the asset immediately. So it records that has been fully depreciated. Then 0% depreciation. This is a situation whereby the asset does not depreciate at all, or you don't want to depreciate the asset. So for instance, land doesn't depreciate, it appreciates. So you might want to use 0% on that. So let's move on. I think I'm taking too much time on that. Now let's move on. We have another aspect where we talk about the ledger account. So the ledger account will list out all ledger account that has been created within the system. You can create your own account in this purpose and all that. Then we move to the next one. Let's go to the business improper. Um, let's look at how do we key in our assets? How do we take in our assets? How do we register an asset? So it is important for you to register an asset. You need to specify when you need to specify when the asset is supposed to start depreciating, when the asset was purchased, at what price it was purchased, then a code. You must have a serial way of numbering your assets. So you must be able to know, oh, okay, this particular asset, maybe you might start with your company name or your location or that. So for instance, for P metric, you can say PNT, which is an abbreviation for P metrics, then slash the asset group, then slash location, then slash the code. You understand? So these things are also very important. You might want to take note of that. You specify the asset code, the description, the asset type. Okay, sorry, let me go back to something I missed out. Asset type. Now, I jumped this asset type the other time so that I can talk about depreciation methods. Why? Because before you can create an asset type, you need what is it called? You need depreciation method. You need ledger account in some scenarios. So in this case, so if you have, you can create your, depending on the groups you will have, you need to specify your asset type code. For instance, if it is, I'm creating an asset type called plant and machinery, I can create plant and machinery. Then I'll pick my accumulated depreciation. That's accumulated depreciation account at this end. Then the depreciation expense account at this end. Then the depreciation method, I'll pick it at this both end as well. Then here I specify the assets account, that is the purchase asset account, because most times this will be useful when you are procuring an asset and at the same time when you are selling off an asset. So that is that about that. So we'll now go into the aspects of this, which is the asset. So like I said, let me just pick one as an example. So if I specify, this are the things I'm specifying. I'll specify the code, I'll specify the description, asset type, cost centers. You can specify all these. You specify the purchase date. Please, your purchase date must not be before your asset start date, your depreciation start date. It shouldn't be before it. So please take note of that as well. Then you specify the depreciation amount. You specify the purchase price of the asset. You specify the purchase price. If you have insured value on it, you can as well specify that. There is scrap value. So that is just an estimate of when your asset is being depreciated, what should remain. That is when it is fully depreciated. So you are just giving an estimate cost of your asset at the end of your asset useful life. So that's what you are specifying here. It's just an estimate. So what this will do is that it will set aside whatever amount you have here, to set aside whatever amount you have imputed here. You set it aside, then whatever value remains here will be what is used for your depreciation. So for instance, if you have 1,000 as your scrap value, it will be, so instead of the system using the whole of 100,000, you understand, it will be 799,000. That is what the system will be using against its use. So, for instance, we are going to be using straight line method. So, for instance, if you are calculating for uh, an asset that is using a straight line method, it will be that your purchase price minus your scrap value, then divided by the useful life. So let's assume your useful life is in 4 years. 4 years. So it will be 4 years multiplied by 12, which is 48 months. So in this situation, it will be 799,000 divided by 48 months. So with that, whatever value we compute will be what will be depreciated every month or every accounting period that you have specified on the system. So let's look at these. You specify the asset start date. When should the asset supposed to start depreciating? You specify that. Then, because of the method you have chosen, now the system already understands that this is what is going to compute. So, at a glance, you can see what the system will be doing for you in terms of depreciation. For what will it be? So, book starts now. This is a total. What's it called? The total depreciated amount so far, because the asset is starting on this date. Look at this, for example, it's starting on this date. Then the system is computing. This is as at December 2023, and so what the system would have is computing for you to see, to have a view of it, that since the time of depreciation, since the time of asset start depreciation till date, it's computing 440,000 for your accumulated depreciation. Now it will tell you prior years. So prior year are years before this particular year, 2023. You understand? So prior year will be 280. So for 2023 alone till date, that is January 2023 till date, you are going to be having 160,000. Now he's giving you a what's it called, the depreciation amount for each period, which is this current period that you're talking about is doing it for 13,000. So if you multiply this by from inception of depreciation, you will get this total. So you can do that computation yourself. So that is how to register an asset. Now it is very important that when you are registering an asset, you use for instance, let's look at the process whereby the asset was purchased. When the asset was purchased, sorry please, I'm writing some purchase of asset. So when the asset was purchased, you can use your what's it called, your purchase module or your payable module to be able to bring in that purchases. You understand? Or you use a direct ledger transactions into it, maybe using your journal to do all that. That is, you debit. The essence is that, okay, let's assume an asset that was fully paid for. You understand? The asset that has been delivered and it was fully paid for. So in that scenario, you don't even need your purchase module again. All you just need to do is just go to your ledger account and debit your assets account. That's your cost account, your asset cost account. You debit that, then you credit the bank the money is coming out from. That is straightforward. But in a situation whereby you are still owing the vendor, or you want to keep track of the vendor, so that's when I say you are keeping track of the vendor. So that scenario I mentioned earlier might not be advisable. That's about if you are keeping track of the vendor, you want to be able to know what you sold to the vendor, or you are owing the vendor. So in that situation, you might have to go through your payables. So when you go through your payables, you first do the aspect of the procurement, which is the purchase order or the sales invoice, the purchase invoice. And when you do that, then you can now do the aspect of payment. Yeah, so when you do the aspect of payment, then the money is, so when you do the aspect of purchase order or purchase invoice, when you do the aspect of the purchase invoice, as at that period, what is happening is that your creditors control account is credited, and your purchase account is, which is your asset cost account, is debited at that period. Then when you make payments on that particular vendor, when you make payment to that vendor, and what will happen is that that creditors control account will then be debited, which is making the control account zero at the end of the day. Then your what is called your bank will then be credited. You understand? So we are still going to end in the same accounting entry, just like the first one. So that is the amount you collected anyway. So now moving on. So if you have done that, you have handled the aspect of the procurement of the assets. So procurement of the asset is actually different from where you register an asset. So you need to then come here to register the asset. So you come to this and click on add and follow the same process I explained earlier. So with that, we are done with procurement, with registration of asset. That is for your asset register. So after doing that, you might want to check your assets register report to actually see that, but we're not going to do that yet. Let's go to the aspect of the transaction, and it is just one transaction I'm going to be picking, and which is what? The depreciation. So for your assets register, depreciating your asset every month, all you just need to do is to come to your transactions on your fixed assets, then come down to GL depreciation batch. You understand? GL depreciation batch. So you click on generate batch. It's only telling you to what's it called, to make a backup before you do that. Before this also, let me show you something. I'll still come back here. Before this also, let me show you something. I was talking about the aspect of integrating this asset module into your GL account, that is your core modules. For you to do that, there is something here. If you check, we have on our GL here, we have on our GL, if you come down here to transaction, so journal batches. So if you click on journal batches, you will notice that there is an asset, there is a fixed asset depreciation that we created for journal batch. We created this for journal batch, and the essence of this is to integrate the asset module into the general ledger. So let's launch this as well. I'll show you where that is integrated. So when you do a depreciation, you can see there are two journal batches here. We have one for depreciation and there is one for asset transactions. So asset transactions, maybe you are making some kind of evaluation, you are making some kind of impairment, you are making some kind of sales scrap, or So what that ledger account goes into that particular journal batch. That transaction goes into that ledger batch. But for the aspect of the depreciation, so this now, for instance, I can't start deleting this one after the other, but let's look at something. Let's look at so this was depreciated up to this month. So let me close this. Anyway, so let me just show you how this was integrated. If you come to after creating this, yeah, I just decided to what's it called, split them. Okay, what I can also do is let me just use this as an example. I'll do this as an example so that we can see new batch. Let me copy a batch, copy batch, and copy the other batch, and call this just depreciation training. Understand? So I'll do this and click on OK. I thought I made a copy. Okay, let me just click on new batch. Something right. Sorry. Let me just do this quickly. Okay, let me just change this. I'll change it to this. So I think I have a bulb there. Anyway, so let me scroll down to where I have my assets. Let me scroll down to where I have my assets. Okay, so this is where I want to show you. So under the default setup for our fixed asset, you can see integration. So I'm making my integration local, then local integration. So this is where you specify the depreciation batch you want your depreciation to go into. Then where you want, this is where you specify the journal batch where you want the transaction as well to go into. So for depreciation, you can see this is for depreciation. Why other transaction is not. So what I want to do is I want to pick this again so I can do a test scenario for you. I'll change it back and I'm done. That has 0. That doesn't have anything on it. So that's one. Let me show you again. This has some line of batches, so and I want to do a kind of test scenario, so and I don't want it to mix up. So look at this is 0. There's nothing here. So let's go to the aspect whereby we depreciate our asset. Let's go into that. I'll click here. Sorry, I'll click on my transaction. So I have GL depreciation batch. Then I click on generate batch. Only telling you if you want to make a backup, you should make a backup before this. Then now look at generate. Where is this coming from? This is coming from the accounting period that we have set. So if you don't have your accounting period here, you won't be able to pick where you want the asset to depreciate up to. So for instance, I just want to depreciate December alone. I think I've depreciated for previous periods. So if I specify up till this, it means that it will generate up to the, but the system will not allow it because we've not even gotten to this date. But let me just pick this date for instance. So this is as at December. And I click on OK. So what the system is doing is that it's trying to get the depreciation values. So it's going to do for every asset on the system. So let's wait. So let's wait for it. So it's computing the new depreciation values. So since it's a batch, so this might take a while depending on the processor of your system. And let's see what that gives us. Um, let's wait for it to do that. So you might want to watch my previous videos, all videos I've made, and watch it on any of my channels. On the YouTube channel, you can check it out on this description, or maybe the Facebook channel, you can check it down on that as well. So immediately that is completed, it drops down this for you. So it's going to drop it by asset type. So this is the value of each of the assets. Definitely, you know that this is going to generate based on assets groups and ledger account. Definitely, you have this already. So when you are done, you click on save, and you click on post. So by the time you click on post, it will then update. When you save it, you can save it and close. Maybe you are not sure of the value, you want to compute yours manually to be able to see. Yeah, you can do that. Then you can come back here. As long as you have saved, you can come back here. But when you click on post, post is going to clear the batch, and when you clear this batch now, you're not going to see this again. So I'll click on post, then it updates the journal batch. It does not update the ledger account, but it updates the journal batch. Then from the journal batch, you can then post. So for instance, I can click on post batch. You want to print the batch file, and if you want to print it, you can click on yes, but for this purpose, I'm clicking on no. I'll click that. So that is done. If I go back to where I have my journal batches, you can see that this has been updated already. So I didn't want it to mix with this, so that's why I splitted it. So you can see what I have here now. You can see this. So if I decide I want to post the yes, definitely I can post it. So I can close this. So what I will do is, let me go and change that back, and so I can post this if I wish. But let me change that back. I just wanted you to see. I'll go into my maintenance, then go to my default and change this back. Okay, so maybe there's something here. Okay, so if you are coming in for the full training, if you are coming to see the full training, you want to also tell you the full training around implementing a fixed asset for you. You want us to implement for you. There are some things we won't be teaching you. We are going, whatever we are teaching you now is what we are going to be teaching you and more. But as a consultant, you will definitely need to know everything around the fixer, everything. So for a user, you don't need all this, you understand? But I just specified all those things so that you can appreciate what the system can do. Then I click on OK, so that's done already. So let's see our assets register reports. So if you go into your reports, you should see. So I'll come down here to say book depreciation. So you can specify as that a particular date, then you can click on preview so that you can see how your asset register looks like. So at this end, you can see what this is. So this will give you a full glance. You can print this out, you can save as PDF, you can save as whatever you wish. So you can get this, you can save it as Excel. You can email this so you get, this is what the report looks like. You understand? You can decide as well. You can decide as well to print the asset as, let me show you something. So group has asset type, because the other one was on assets alone. So look at this now. This is on assets alone. This is not grouping by anything. This is on assets alone. Then if I click here and say review, you are grouping it by, so you can see your assets now grouped by the assets type. You can see all your assets here for you to have a glimpse of it. You understand? So let me close this. So you can as well still want to group further by anything. So you can group by two levels, which is the primary and the secondary. So I think that's just about that. So if you have any other question, please let me know. I think we are good to go on that. So to see you other time, please join my channels. Like, comment, share, and subscribe. Thank you very much.